Welcome to all of you. Since today I will take class of financial management paper. Today our topic is role of financial manager to the business organization. Since all of us know that there is very important and crucial role of business manager, financial managers to operate the business. It's having important and crucial role to manage the finance so that the business organization and entity can get the maximum profit from the market. In line to maximize the profit of business organizations, financial manager deliver its own best and efficient and optimum duty so that there is a smooth running of the business organization. So there are some few functions of the financial manager. I will explain one by one. First function is raising of funds. First and foremost, the important functions of financial manager is to raise the fund, to raise the finance, seize the various way and various source of the finance. From there fund can be raised. Financial manager have to maintain the optimum ratio in between debt and stock, so that it's not have much burdens on the firms. It has to maintain the balance between equity and debt. So they should see the various sources which taking loan from the debt market. The other source is stock or the equity. So has to keep balance between both of these so that have the smooth functioning of the firm. Similarly, the second important functions of the firm is the allocation of fund. First, the realized fund and getting the fund, and second is the allocations of the fund, or even I would like to say the efficient and optimum allocations of the fund to the various activities of the firm, so that the optimum use can be done. When the financial manager allocate the fund, he should keep in mind these important point. Point is, size of the firm should be optimum and must have the growth capability of the firm in short term and long run. Firm will not facing the shortage of the fund, so there should be the optimum allocations, which is crucial. The second important point when keep in mind when our allocations of the fund, that is short term or the long term, has keep in the balance in the requirement of the firms. Financial managers should allocate fund for short term and the long run, which is essential. The long term, the sustainability should keep in mind. Short term is the requirement which should keep in mind of the manager. So this important point should kept in the mind. The third important point, the mode in which the fund are raised, in which way fund will be raised. Similarly, the financial decisions directly or indirectly influence the management activities. Hence, formations of the good asset makes proper allocations fund one of the most important activities. When allocate the fund, must keep in mind the liquidity and asset, so that short term and the long term there would not be any shortage of the funds for that. Third important point of financial manager when managing the finance is the profit planning. Basic objective of the business organization is to maximize the profit. Profit is two ways to maximize the profit. One is to reduces the cost, and second is to resist of total revenue. So the financial manager must see the many points. First is pricing, what kind of prices will have in the market, which prices should be the optimum so that can sell the maximum output. Second, the industry competition, what kind of market organizations is there, whether it is having the competition or having some monopoly power. They should see the state of economy, what kind of economy is there, what kind of demand and all things are there, whether inputs are easily available or not. Similarly, must see the cost and output analysis, must see the capital output ratio of the firm. Manager must see various kind of factor of productions like variable and fixed, which factors should keep in mind. So through this way, firm can maximize the profit. That is essential to run the firm. Fixed as cost. Within this fixed cost, having kind of sunk cost which is not required, but the other fixed cost which is some cost is received when the firm is in loss. So when allocate fund for purchase of land, machinery, all kind of fixed asset which will have effect on the long run. So financial manager must be careful to have expenditure on these various activities. Similarly, manager must see the depreciation, which are quite important. All asset machineries is every year having some amount of depreciation. So all these things must seen by financial manager so that in beneficial of the firm can maximize the profit. The other important functions of finance manager is must understand the capital market, what kind of capital markets are there, must trace capital market, what kind of stock market is there, whether it is boom or bust, whether it is in demand or not. They must clear understanding of gilt market, capital market, stock and all, so that financial manager can calculate the risk and all. Firm is not always avoid the risk, but some risk should be taken so that can have the maximum profit in the future. So it is responsibility of the financial managers to identify risk and uncertainty of the financial market of future, so that can allocate the proper amount of fund. So in this manner, I have explained these four important functions of the financial manager, which must understand carefully and must deliver its best duty and best responsibility to optimizes the output, to maximizes the profit of the firm. Should not have non-usable stock of items, which ultimately giving the negative result of the firm. So hence, given all circumstances of the firm, financial manager take the correct decision, right decisions, so that the funds can be allocated in proper way, fund can be raised in optimum way, firm can distribute it in the manner in which can have the maximum returns of the firm. So all these are responsibility lying on the financial manager. So financial manager must have expert on all these activities. Thank you to all of you.